So we're at the top of the hour, and I think we'll get started, and hopefully we'll be joined by Mounir soon. But in the interest of time, and in the fact that we've got quite a hefty amount of conversation to go through, we'll get started, and we'll go from there. So welcome everyone. My name is Pritesh Gandhi. I'm the lead of digital transformation here at Lafarge Holcim. I'm based in the Boston area, Boston, USA, and I work with the corporate digital group. So we're known as MAQERs, and this is the panel on customer insights and value creation. So I'm pleased to welcome you all, and also pleased to welcome the esteemed panel that we have assembled today. So thank you all. And in order to be able to try to get going on this, I'll take a few minutes to introduce the panel, and I'll go through their introductions. And of course, panelists, if I miss anything, please feel free to add, and then we'll go into the conversation. So today we're joined by Zach George. Zach's in Cape Town. He is the co-founder and chief investment officer at Startupbootcamp. He oversees the investment portfolio of Africa's largest early-stage venture firm, focused on accelerating e-commerce and consumer tech enterprises throughout the continent. Prior to leading Startupbootcamp, Zach held several leadership positions at investment banks and several other Wall Street firms. So welcome, Zach. Thanks for joining us. We also are joined by Wenyi Cai. Wenyi is the CEO and co-founder of Polymath Ventures. She's based in Bogota, Colombia. Polymath is a pioneer of the venture studio model in Latin America. And Polymath has launched several e-commerce and service marketplace ventures in the recent past. Prior to building Polymath, Wenyi successfully built Milo.com, which was sold to eBay. She has lived and worked in the Middle East, South Africa, Asia, North and South America. So welcome, Wenyi. Thanks for joining us.
Thank you.
Yeah. We're also joined by Jaime Hill. Jaime is the CEO of Holcim Mexico, previously the CEO of Holcim Colombia. He is based in Mexico City. He leads Holcim's business interests throughout Mexico, which includes cement production, aggregates, ready-mix, and retail operations under the Descensa brand. Holcim's operations span throughout the entire country of Mexico. Jaime has been with the group at Lafarge Holcim for over 20 years. And previously, as I mentioned, was the CEO of Holcim Colombia. So thank you, Jaime, and welcome.
Thank you, and good morning and good afternoon to
Great. We also have Raghu Ravinutala. Raghu is the co-founder and CEO of Yellow Messenger, based in Bangalore, India. He leads the team at Yellow Messenger as they build the next generation of conversational messaging to enable e-commerce and enterprise-level communication. Prior to founding Yellow Messenger, Raghu held several senior-level positions at Broadcom and Texas Instruments. Thank you.
Hello.
Thanks, Raghu. Nice of you to join. And last but not least, we have Jean-Claude Lasserre. I hope I'm pronouncing it correctly. Jean-Claude is the CEO of Saint-Gobain's South African and sub-Saharan businesses. He's based in Johannesburg, as I mentioned. He oversees the management of 15 countries throughout the EU. And prior to leading the African business for Saint-Gobain, Jean-Claude held leadership positions in Europe, China, and Latin America. So thank you, Jean-Claude. Great. So thanks everyone for joining. I don't know how many folks here at on the panel, or those who are in the audience, had been part of the fireside chat that was occurring a few minutes ago between Miljan and Roman. But we heard some interesting trends about emerging markets and about how we are seeing digital marketplaces evolve within emerging markets. He talked about the idea when in Africa, for example, where they've seen a 700% increase of e-ordering. So certainly a dramatic amount of adoption and dramatic amount of connectivity between consumers and corporates like ourselves at Lafarge Holcim, but certainly other corporations as well. So it seems like there's going to be a continued trend towards engagement of customers and enterprises on digital tools. So I think we're going to use that as a basis to sort of try to launch some of the questions that we have here. As the CEO in Sub-Saharan Africa, what do you see changing as far as customer behavior and expectations, and how do you react to those changes?
I can start clearly speaking. In Africa, actually, we see, I will say, the same trend that all around the planet, but with a main difference in reality. It's the cost of data during years and years has been a limitation in Africa for people to interact in reality and to train themselves, to teach themselves, to get know-how in reality, and to make also e-transaction. And I think it has been a limitation. This start to change in reality in the past years. Many governments try to allow in reality a lower cost of data. What push, in addition with the pandemics, obviously speaking, e-transaction, but in general, all that you can do with internet to have grow particularly well. And I take an example, for example, in the building area. I think that where I'm quite involved, and by the way, as Holcim is very involved. We see, for example, very big chain as Walmart is build a warehouse. Building from scratch a business of marketplace and e-sales of around $40 million in less than 3 years. So I think, and it's not only Takealot or Jumia in Nigeria. Many actors today are really booming as hell, including for, I would say, brick and mortars, I would say, or basic stuff with a lot of click and collect. So I think agility and the data costs allow in reality acceleration on the consumer base to have access to e-sales and e-trade.
Great, thank you, Jean-Claude. Zach, so it looks like you can find your tech issues as solved. So again, the question was mostly around some of your startups that you've invested in the recent past. What do you see as far as what makes them unique, and how do you push them towards understanding customer needs?
Yeah, absolutely. Thanks, Pritesh, and sorry for the technical difficulties earlier. Yeah, so we've been investing in Africa for the last 10 years as an angel investor, as an accelerator, and now as a large Pan-African seed fund. The one thing I'll say off the bat is business models from a tech scaling perspective in Africa are very different to what you'd expect in the US, in the Americas, and Europe. So B2C business models are very hard to scale, simply because the cost of acquiring customers in Africa is a lot more expensive, right? For lots of reasons: lower e-commerce penetration rates, lower internet rates, etc. So what does work exceptionally well is B2B business models and B2B2C business models, right? So if you can lower the cost of distribution to as low as possible, while at the same time increasing your customer lifetime value, then you've succeeded. So the 4 key industries that startups in Africa tend to work with from a customer acquisition standpoint are insurers, banks, retailers, and telcos. So as an accelerator, as a fund, we have a strong preference for founders that understand how to do POCs, proof of concepts, pilots, license agreements, JVs, and white label solutions with these 4 subsectors. And those tend to be the ones that scale the quickest and have the lowest customer acquisition costs. And then it's an entirely a high volume margin sort of relationship. And that's something that is very important from a scaling perspective. And I think Jean mentioned it earlier, the high cost of data makes it very hard for you to do it from a B2C perspective. So that's a high level thing that I'd mention. Yeah.
Great. Thank you. I appreciate it. Maybe we'll take a quick jump from what we heard from Jean-Claude and Zach, yourself, to maybe we take a quick flight over to Colombia, and Wenyi, I'll ask you from your perspective, do some of the things that you just heard from Zach in terms of the challenges or the opportunities that exist within the sub-Saharan market in Africa apply to what you see in Colombia too? And your organization, as you're building this venture studio model where you're not only incubating interesting companies, but also maybe doing a lot of the kind of work that Zach was talking about in terms of POCs and introducing new ideas to the market. How does that ring true to you, or do you see similarities in your market there?
Yeah, I think that what's interesting about building in these markets, as Zach mentioned, is, of course, right, marketplace models are very, or the marketplace business model is quite well suited to emerging markets. And in the case of Latin America, even though it's a middle income economy, there's a lot of parts of the economy and the labor market that is actually still informal, right? So you're talking about 50% of the labor market that's informal. And that means that there's a lot of fragmentation, both on the supply side and on the demand side, which means that marketplaces actually are a great model to leverage and kind of connect consumers and providers and increase productivity and so forth. So given that setting, for us, what we see is probably the opportunity is bigger in many ways for marketplaces to actually be utilized for many parts of the sector, right? So we have, for example, service marketplaces in auto repair all the way to surgeries, right? So that's a range that I think is a little bit hard to imagine in the US, right? That you basically buy surgeries on a marketplace from an independent surgeon, which happens to be the case for like most of the middle class are not able to afford surgeries and they don't have insurance, it's not covered. And so unless you can afford the very kind of high-end hospitals that have surgeons on payroll, everybody else is kind of an independent, which makes the marketplace model actually relevant to serving. And I think, so that, I think the span of industries and services and e-commerce and how that can be served through the marketplace model, I think the range is really wide. At the same time, I think that you have issues related to often cost of acquisition versus lifetime value, right? And even like servicing costs if you are doing things in a very manual way. Because what happens if people are, I think, let me give you an example. So for example, we serving the middle, so the adoption of e-commerce for middle class, and especially I would say lower middle class, is still very, very low in Latin America, right? And there's lots of reasons for it. Trust is one, familiarity, and so forth. But in the moment that we are, how do you kind of overcome that issue? And one which immediately leads to the cost of acquisition versus lifetime value issue. So for example, what we've done is we've built a social commerce marketplace called Elena's, and that leverages the decades-old behavior of direct sales ladies. There's 11 million direct sales women across Latin America. And so it's a very deeply entrenched behavior that people buy from their friend or family member that does direct selling. And so what we've done is we built this marketplace that allows especially younger sellers to leverage, tens of thousands of SKUs, and they use digital channels to essentially sell to friends and family and beyond. And I think that fundamentally changes the CAC of our business, right? So not only are we acquiring multiple buyers through acquiring a seller, but we're also acquiring the seller for very cheap because there's so many people motivated to make additional income through direct selling. And so that's a way for us understanding the existing behaviors to then, really leverage that existing behavior to overcome some of the challenges of landing business models that we've seen elsewhere, let's say, but don't translate immediately, right? It makes sense for e-commerce to occur, but how does e-commerce happen for this demographic, given the unit economics and given the behavioral kind of adoption issues that we currently see at this moment?
Great, thank you. I mean, that's some fantastic insights, and I appreciate the sort of the broad breadth of both challenges that you face from a testing standpoint, but then also being able to adapt to the various different consumer / provider behaviors that occur in those markets. And maybe if I can just quickly bump to Raghu, because I think some of the things that we just heard from both from Wenyi and from Zach talk about the differences in the behaviors, but also the opportunities that come in. And we heard both from both speakers the notion of this fact that data is expensive, and it's a challenge. And Jean-Claude also supported this. And you're working in Yellow Messenger on a very innovative way to use pretty much the most common natural thing that we all have, which is our voice, to both enable commerce and communication. Can you speak a little bit more about what you're doing and how it relates to some of the opportunities that were identified by some of the previous panelists, if you don't mind?
Thanks for the question, Pritesh. So India has seen the entire evolution of marketplaces from the models where it was direct e-commerce companies building marketplaces to marketplaces moving through intermediate channels as WhatsApp and sellers selling to their friends and their clientele. And what has essentially emerged over the last 3 years is the huge discounting of data, as Reliance Jio has been a big player in completely reducing the data costs across India to very low levels that kind of enabled a large section of the population to access internet. So suddenly the total market that is addressable for these marketplaces increased dramatically. But then there are problems that it came with, is that a majority of this population hasn't used websites, hasn't used mobile apps before, and messaging and voice potentially are the only mediums that they interact. In fact, a significant set of this population is not even literate to actually type messages and give responses, and voice becomes the only medium to reach to this broad audience. What we have seen, and I think one of the primary motivations for us to start this company was to enable marketplaces, enterprises that are trying to reach these large audiences, provide a way for them to digitally reach them through WhatsApp in their local language, digitally reach them through automated voice assistants that can provide customer support, enable commerce across these wide variety of audience. And in many cases, that has become an enabler to these businesses. To give an example, there's a company called ConveyGenius, which is essentially enabling millions of students to get content of courses, tests, etc. And the only way that they could scale to 10 million plus users is through WhatsApp as a channel and as a platform. And those are the experiences and experience at scale that the conversational AI mediums are enabling companies to do.
Great, thanks, Raghu. Well, maybe I'll jump to Jaime, if you don't mind. Jaime, you heard a few things that we are seeing from some of the VCs or investors on the panel, as well as Jean-Claude, who has sort of a similar enterprise on the Saint-Gobain side, and from Raghu as an entrepreneur trying to solve some of these challenges in these emerging marketplaces. Maybe I can ask you, from your perspective, given the very diverse range of businesses that we operate within Mexico, and especially in the Disensa brand on the retail side, how do you see some of these tools coming to play? We talked about the various different nature of the sellers. When you talked about the women sellers who are 11 million so distributed throughout the country, we talked about the challenge of going through financing and being able to get a credit for this. Talk to us a little bit about how you're seeing this from your perspective at Holcim Colombia, not only from our Disensa brand, but across our B2B as well, because I did get a few points here to suggest that there's this big important focus on B2B2C, given the fact that we do have, in the end, customers using our products. So maybe elaborate a little bit more on that from your perspective.
Thank you, Pritesh, for the question. And yes, we have challenges when I was in Holcim Colombia and here in Holcim Mexico. Listening to the team here on screen, B2B is moving faster than B2B2C. I totally agree with Wenyi that the lower income sectors are moving slower than expected. But it's amazing. It's rapidly changing to the other way. Why? Sadly, because of the pandemic. We have to look at the bright side of the pandemic. The whole digital business is moving rapidly. It's amazing. Our clients don't want to deal with the traffic anymore. They want their products delivered as soon as possible. We've had some very solid experiences with a couple of launches with our Disensa retail network. For example, the commercial chatbot that we have with them and implemented with them, but at the same time with more technical clients, like the ready-mix clients with an iConcrete app that was developed. That app is pretty much a sensor that for the construction business, if you can determine the strength of your ready-mix early stage, that saves a lot of time. So we have the same pain points, we have the same challenges, but in Latin America, and Wenyi will agree with me, it's moving rapidly. It's amazing how our Latin America Mercado Libre is stronger by the minute, and I believe we must take advantage of these opportunities, Pritesh.
Thank you, Jaime. So I think I've seen sort of similar trends or similar points that each of the speakers has brought up. I'm going to move on to try to connect some of what we were hearing from Jaime and try to see if I can connect back to Jean-Claude. So Jean-Claude, you're seeing, I think also sort of a diverse range of products within your portfolio in Saint-Gobain in South Africa and southern sub-Saharan markets. Can you talk to us about how, as a corporate, you're thinking about e-commerce and thinking about what kind of strategies you want to put together to successfully implement perhaps e-commerce innovations on your side?
Yeah, I think Jaime was talking because we have businesses that are not very far. We are not selling the same typology on products, but we are the customer basis. We are quite strong in retail space because in Saint-Gobain we are selling quite a lot of product also in retail, so not only on the I would say commercial space or contractor space, but on the retail. Clearly speaking, we are working heavily with our partners, with the distributors. By the way, Saint-Gobain, as you know, is also a distributor in Europe and in different countries, to obviously get the full possibilities from e-training apps making life easier to customer. Obviously transactional, so e-sales, but not only e-sales. We are working also a lot on mass data, in reality, to try to prepare and to get capacity in reality to offer to a customer the good solution. So, and in Africa in particular, we are present around 20 countries, so it's very diverse. Obviously speaking, in South Africa, we are we are working on many apps, including payment apps, different topics that we are working, not alone, because we don't have all the technologies. So I think maybe we can discuss later on about startups, but this is all about. So the capacity is strong, and I will say the willingness from a customer base is, I agree with Jaime, is growing and growing. And I think the pandemic make it something that we thought that can be reversible, unreversible today, because basically speaking, the habits are taken. And I think at least the click and collect for ponderous products, and later on, I will say direct delivery, even if the last mile is a bit difficult here still in Africa and will remain a complex for B2B.
Great. So I'm going to switch to a few questions that are coming in from the audience. I have several others that I want to pick up on, but I want to make sure that we try to address some of the questions that are coming in from the audience. So Jaime, we have a question from the audience around which issues with the client's chatbots, what did they help solve, the chatbots? What did you see that was solved, and how does it work from your perspective? And are you seeing questions around logistics? And maybe please describe a little bit more about this particular service on the chatbot side that you see in Mexico. And then maybe I'll ask the same question to Raghu after Jaime chimes in about what you're seeing with conversational bots as well. So Jaime, please, if you just go through what you saw being solved and how it's being used.
Thank you. It started quite simple with just pretty much frequently asked questions, but it developed along the way. Our clients through the chatbot can look at their account balance. They can see where their order taking process, at what stage of the game it's at, and when it will be delivered. It has an option if you can pick it up at the plant, or we can deliver it through our distribution centers or through our Disensa stores, credit or cash. So it's developing quite nicely, and we've received some solid feedback from our pilot that we launched in the Sonora and the Baja California region here in Mexico, and we're rolling it out throughout the rest of the country. And it started in Colombia, by the way, so we've implemented a lot of nice things that we learned from our team in Holcim, Colombia, and this is spreading rapidly throughout Latin America, Pritesh.
Great, thank you, Jaime. Raghu, maybe you want to just chime in a little bit about how you're seeing conversational chatbots or conversational bots being used with your services, and in what kind of applications? Oops, you're on mute, Raghu.
So predominantly we are seeing a lot of B2C use cases, especially with the onset of COVID. We have seen a lot of commerce, a lot of retail companies, their distribution network got disrupted, and there's a strong inclination for brands to drive direct interaction with customers. So we are seeing a lot of commerce happening on WhatsApp as a platform. Customer service has been a traditional area where chatbots and voice bots have been used pretty heavily. But more interestingly, we also seen with companies that have these dealer networks, we have seen this dealers placing orders on WhatsApp and directly connecting to the SAP systems at the back end, getting the order status and providing customer support. Companies have seen their order servicing ratios increase dramatically. And third, uniquely, what we are seeing is in employee services, automating the HR operations, automating IT support operations, enabling field sales agents. So that's an area we are seeing the adoption in a very strong way.
Great, thank you. So moving on to some other questions that are coming in from the audience here. This is maybe a question for Wenyi, but I'll also maybe lean on Zach as well on the same question, because I think it applies to some of the things you talked about. How do you define the customer needs before building a new B2B marketplace? I mean, we talked about this idea off the marketplace. And you gave some very diverse examples, all the way from surgeries to consumer goods. So maybe help us elaborate a little bit more about how do you define the consumer needs, and maybe an example from the Polymath portfolio. And Zach, I'll ask you for maybe an example from the Startup Bootcamp portfolio, if you don't mind. So Wenyi first.
Yeah, so I mean, the Polymath process starts quite focused on human-centered design to understand the deep needs, right? And I think what's interesting around these marketplace models is you need to, in order to build the right marketplace, and service marketplaces are probably even more complex, you need to understand the needs of the end consumer and also of the supplier. And in most of these cases of the supplier, we're talking about either micro businesses or independents, right? So actually, I would say their needs, the way to understand their needs parallels pretty well how you would go and understand a customer need, because it's mostly individuals trying to manage their businesses, right? And so we do kind of classic human-centered design in terms of understanding the needs, translating that into insights, and then kind of ideating the concepts that would serve those. What I think is interesting to state is that oftentimes the consumer needs in these markets are related to the fact that there's lack of information. So it's very opaque market, because previous to digital, I mean, there really was no way to understand. So in the case of the auto repair space, right? So you have some of the dealerships and they charge a lot, and so people don't want to go there. And then you have, in Latin America, our estimate is there's probably something like 700,000 small workshops of auto repair, and probably 650,000 of those are independent, right? And so how would you really go about understanding the prices, the quality, and so forth? And so I think the consumer pain is around, I don't want to be ripped off, I don't want to go to the dealership, but I really cannot differentiate between all of these like very informal offerings that are out there. And then I think for the shop, on the shop side, their issue is that they're being squeezed by everybody. They're being squeezed by the parts kind of importers. They don't know how to acquire customers. So generally they acquire customers through word of mouth, which is very, very slow, and so forth. And also the labor side is not easy to manage, right? And so I think when we think about building the marketplace, it is not just a matter of connecting customers and the supply. I think that is that tends not to work in the markets we've seen. So we are actually building much more B2B2C to understand, okay, what are the needs of the shops? They need more customers, so we need to bring them customers. But they also need access to parts at a reasonable price, right? They need that delivered in time to not delay the service being delivered. And then on the customer side, they need a lot of transparency, and they need a lot of communication, and also pricing that is like reliable and so forth. So how do you use technology to essentially help the shops deliver those value propositions that they are not able to? It's not out of not wanting to, it's not like they are not capable of delivering it for a variety of different reasons. And so I would say that I think especially in the markets that we serve, really understanding the needs and the mismatch, and understanding how to use technology and platform business models to solve those, but solve those in a much deeper way than people usually think of on just kind of a connection aspect.
Great, thank you, Wenyi. Zach, does some of that ring true to the enterprises that have been built at Startup Bootcamp in terms of how they're trying to connect marketplaces? Especially, I think what I really liked from what I heard from Wenyi was this notion of the deep user understanding, because of the fact that there's this dynamism associated with the consumers and with the suppliers here. Can you speak to a little bit about your understanding from what that looks like in your region?
Yeah, of course. I mean, Wenyi makes a lot of very good points. I mean, I think the common theme in the VC industry globally is unless you fall in love with your customers and you really understand what their problems are, it's going to be very hard to scale businesses. I mean, Steve Blank, I think, was the guy who once said, no one ever asks for a 6-inch. Founders tend to be, have this concept called confirmation bias, where they love their product and they're always out telling the world how amazing their product is, but they haven't fallen in love with the solution. So what we do, similar to what Wenyi does in Latin America with her with Polymath Venture Building Studio, is we started off as Startupbootcamp as a global accelerator first as a venture builder, and then looking at acceleration. So we would literally go and spend hours with our founders before they even got into our accelerator and say, hey, what are your customers struggling with, right? And then because we know how hard it is to build B2C businesses, we would then go and see what is every possible angle that an insurer, a bank, a telco, or a retailer, a media company. So we would almost force our entrepreneurs to work with corporates and solve a problem that a customer has. So the whole customer discovery journey, we would involve corporate A, entrepreneur, and customer, and make that happen. So it's a lot of work that goes into these processes. I'll give you a very quick example, so it doesn't sound like this is very theoretical. There was a company we backed in Kenya called M-Post. As everyone here knows, Safaricom and M-Pesa is pretty much the largest bank in East Africa. Mobile banking is significantly more evolved in East Africa than anywhere else in the world. So what they did is, there's a problem in East Africa, but Kenya specifically, around deliveries and delivery of postages of parcels and packages. So there are only 400,000 post boxes in the whole of Kenya for a population of 48 million people.
Wow.
So most deliveries end up going to fake addresses or never actually happen. So what they did is they created this beautiful piece of technology that converted your cell phone together with your closest zip code into an actual address. Instead of having your address as 123 Main Road, Nairobi, your address became your cell phone number dash your closest zip code as your legal address, right? So you could have stuff delivered to your post office versus a post box, right? Brilliant piece of technology, but it was a partnership between the government and Safaricom, the largest telco. So they started selling these mobile postal addresses for $3 a year, and they spent a ton of money trying to acquire customers. And then we said, well, that's one way of doing it, but if you turn the dial back and say, what do large insurers and banks struggle with when they have to deliver policies or bank cards or statements? Why don't you get the big corporates to prepay the cost of these mobile postal addresses and just take it off in terms of monthly bank admin fees or insurance premium fees, so the customer never actually sees it coming out of his or her wallet. So we essentially put ourselves in the minds of the customers and got a big corporate to work with us. And they've now shot the lights out from a traction standpoint. So you got to think like a customer in order to understand how to scale a business. It's what I tell me, like just generically in the VC world, if you want to get more customers, think like a customer. If you want to raise more capital from investors, think like an investor. You can't just be selling and eating your own dog food, for lack of a better word.
Well said. So I love this idea that you brought up around this obsession around customer, obsession around what the customer needs might be, and focusing in on and coming up with the highly practical example you just talked about for the delivery of packages, for example, in Kenya. And what I guess I'm particularly biased around is that's the kind of examples that can only come from the open innovation ecosystem. I mean, these are not, and no discredit to those of us on the corporate side, these are not the things that we can be obsessed about. I mean, we, for better or worse, companies like Holcim and Saint-Gobain and others have other obsessions that they have to also worry about besides just the customer, such as production and logistics and distribution. So while as much as we would like to be on the forefront, the reliance on our partners in the open innovation ecosystem to be able to help with understanding marketplaces, to be able to understand what it means to play in the logistics world and get product from A to B, and then understanding the payment piece of it is really important. How do you finance this? How do you create the kinds of challenges or create the opportunities for the challenges that our customers may have? So Mounir, I think I see you finally on. Can you hear us?
I can hear you. Can you hear me now?
Oh yes, we can hear you. Amazing. So I'm going to turn right to you with the question, because I know you're focused today primarily on the latter half, on the logistics and then the payment side. Can you speak a little bit about what you're seeing with your solution at Halan and MNT Halan, and talk to us a little bit about what that looks like in your marketplace?
Sure. So our DNA comes from lending. So that's our basic, and financing, and we're typically to underserved communities and microfinance and to people in unbanked people. And our application has three main pillars. One is an e-commerce platform with a buy now, pay later option. So it's a consumer finance platform where they can shop around. And another one is apply for a loan. And apply for a loan is typically for a small business or a small entrepreneur who is unbanked, and it's typically for working capital. And three is the logistics part. So it is delivering the product to the house, or delivering individuals, or moving people from one place to another. So we've got fleet of drivers that are moving people around. And basically what we are setting out to do, or what we're working very, very hard to do, is create an ecosystem for unbanked and underserved customers in the governorates of Egypt. So Egypt's 100 million population. Most of the companies are addressing a small niche of these customers, and a lot of those are underserved, and that's our main focus. And from a customer perspective, we are very, very customer focused. And what we've realized is that the attention to the customer makes a huge difference. So from the minute, so very often in the delivery of a product, there is a man in the loop, and there is a human element, whether it's a warehouse, whether it's a driver, whether it's a guy who needs to get a guy to sign a piece of paper, and the attention to the customer makes all the difference. The turnaround time makes all the difference. And this is one of our very, very key KPIs, and we try to shorten it and make the transactions as seamless as possible. Naturally, the regulatory environment makes a huge difference, right? So currently, the Central Bank of Egypt has given companies a lot of leeway in order to be able to lend and finance, so, and the Financial Regulatory Authority. However, there are some papers that you need to get ink on paper in some products, and that of course slows the process. Once we've got eKYC, once we've got e-signatures, once that takes you to a whole different level of operation and seamless experience to the customers.
Thank you. I appreciate it. So we have about 3 minutes left before the session ends, and I feel like we've been cheated a little bit, and I think we could probably have another 3 hours here, because there's so many questions I have. I've actually only got to 2 of my questions, and it seems like the audience has continued to add a few more questions. So I'll try to summarize a few of these questions that I'm trying to piece together here. And one which is coming in is technology development and adaptation is not easy for a depressed market, or for a market which may have some challenges around poverty and income levels. Can you speak a little bit about how it can grow rapidly? I think is one question. I think that overlaps a little bit with the question that was brought up in terms of the ability to Latin America, we have an issue with poverty, so access to technology and internet is limited. How do you boost digital conditions in these marketplaces? And I think I heard, Zach, you had an interesting example with this notion of corporates helping sort of subsidize this for their customers. Mounir, I heard a little bit about being able to get folks underbanked folks banked. Maybe I can turn back to Wenyi for you and to perhaps Jaime on this question of how do we get our impoverished customers on board and find ways to really give them access to technology. Have you been tackling that with some of the enterprises you're building, Wenyi? And Jaime, from our perspective, from Holcim, what are we doing for that particular piece as well? So I'll first turn to Wenyi and then maybe jump to Jaime after that.
Yeah, I would say that we're not dealing with the infrastructural side of things, but I think that one of the key principles for us is if you look at the businesses we're building, we're almost never only building the actual offering, right? So we are very focused on income generation and how do we increase income, whether it's supplemental or the main income that people are making, right? So for us, kind of the way to affect this market is not just about how do we get something to the customer more efficiently, but how do we fundamentally increase income for the supply side. And so if you look at AutoLab, which is our auto repair platform, the shops that work with us, their profit go up by 700% after a few months of being part of the network, right? So I think in terms of startups and I think thinking through how do you increase income in a very significant way for people who join the platform is one of the ways that we're actively dealing with this issue, that it's not really just about supply, but it's about demand, right?
Great. So Jaime, maybe one quick last word from you and then we jump back to the main session.
Absolutely. Mounir mentioned the financing part is huge. Fortunately, here in Mexico, we fintech regulations. So that's a huge upside. We're not going to solve the problem, but we're working on how to get remittances coming from Mexicans living abroad to Mexico, to our lower income clients, so they can orient those remittances for a better house. So it's a huge opportunity. We're not going to solve the problem, but it's a start. Unfortunately, we have fintech regulations here in Mexico, not in the rest of Latin America. Hopefully we will get a head start over here.
With that, unfortunately, I do have to close this. I wish we could do this again or stay in some fashion and continue and get through the rest of the questions that we have. But I want to thank all the panelists. It was a fantastic, engaging conversation. I'm sure there'll be hopefully more opportunities to connect. So thank you very much. And to the rest, have a great day, and we'll see you when we come back to the main panel. Thank you all. Bye.